Number 1, salary and progression. In investment banking, there is a standard amount of years that it takes you to progress to the next level and a standard salary bump in terms of percentage that you're expecting to get at each level. It's pretty much, you can go online and research what your pay will be or what your pay is likely to be or the range of it and roughly get the idea. So something that is definitely natural is that you're expecting that your salary is probably not going to be as much as investment banking. Not many industries can probably match investment banking apart from private equity, and especially going to a startup which is supposed to be relatively tight with money and kind of more frugal. That is something that I definitely expected and took into account. What I think took me more by surprise is the rate of progression and the rate of promotion in the scale-ups or startups. It really depends on the size of the organization, but for a scale-up that is already kind of more than a few hundred people, it is really much slower and it takes a lot longer to get promoted, and even that pay bump will not be more than 5 to 7% unless you're promoted. What surprised me as well is that didn't really depend on how well you're performing or how much exactly time you spent or how big of a project you worked on. Also, there are no standard frameworks in when you get promoted and how that really works. Even at an organization that I used to work at, where there were a few thousand people, there was no standard process in terms of why the person gets promoted. There's a certain criteria, but it still remains to the discretion of either your manager or your manager's manager, or even your manager's manager. In investment banking, you usually know what your career and what your position is going to look like in 2, 3, 4, 5, 10 years. As sad or great as that sound, that really doesn't work like that in the scale-up world, and that could be a good thing or a bad thing. If it is a small enough organization, you could really work yourself up, either because of people are leaving, or you're achieving kind of massive things, or you're really overperforming on all fronts. Although I would say that is probably more likely at a very small organization and a very small startup rather than a scale up. But this is definitely something to take into account. Your salary cut is steep, but your also career progression might not be as streamlined as you expect it to be, even though you're planning to work hard and achieve those things, and you're coming from investment banking with a pretty good background and affinity to a pretty quick pace. Number 2, responsibility. I think what I didn't expect as much is having a lot more responsibility in a startup or a scale up. In investment bank, even if you're an analyst or an associate or a VP at that point, you always have to refer to the ultimate decision of your managing partner. You always have to wait for comments and make sure that they have the ultimate say. And it's usually more difficult to be an expert in a specific area, given the transactions are relatively standardized. So the more experience you have, the more you know how that specific industry or transaction actually works. There's a specific process that is followed and specific types of tasks that need to be performed. In startup and a scale up, of course, there's a lot more chaos, and the responsibility usually doesn't sit only with a senior level, but you're also, even at a junior level, at an associate, let's say, or a manager level, you're expected to not only come up with solutions to existing problems, but also to find the problems and solve them and bring the solution to the table, which could be very interesting because you actually feel the impact much more and you become an expert in the area that you're looking at, because no one is going to look at it as closely. And because those are the types of problems that would be more unique depending on the organization and the industry, you would be the closest one and the most likely person to have the solution to them, given that you've been working in that area. I think I found that quite exciting, and that really made me feel like I am actually having some impact on either the product or the company strategy, which made me want to be more involved in broader and other projects. Number 3, the skill set that I developed throughout my time in a startup and a scale up is a lot more varied compared to investment banking. Due to the standard structures in investment banking, if you're an investment banking associate at Morgan Stanley or at JP Morgan or at Goldman Sachs, you're probably doing a fairly similar thing and you probably know what the others are doing. So if someone is a VP level, you probably know what types of things and how many years of experience they've had and what projects they might have worked on. While in the startup or scale up, the structures are very different across different firms and different industries. And depending on the position, you tend to cover a lot more different things. The topics tend to be a lot more varied. So for example, at an organization that I used to work in at a scale up, I used to be part of the finance and strategy team, which is basically sitting in between the operations team and the FP&A team, and responsible for longer term strategy as well as kind of the day-to-day strategic decision making. When I was about to transfer to a different firm a bit earlier in terms of the stage of development or the age, they literally had a finance team of 3 people who was basically doing all of those things, the FP&A, the strategy, the operations part. So all of them were doing that. While there are a lot of teams who are probably similar, it doesn't map one-to-one to different organizations. That also means you don't have a homogeneous experience compared to a finance and strategy person in a different organization. You also touch very many aspects of the process. So you don't only do the financial part, but for instance, I used to work with the product teams and the marketing teams on the campaign launch strategy, and with engineering and data science teams on, for instance, the structure of the data in the background. So this is something that made my experience a bit more varied. Also made me understand what different roles at different levels and different parts of organizations are doing. It made it a lot more transparent if you ever wanted to move to a different type of role, let's say product, which some of the people I know in finance have done. You're a lot more familiar already with what the team does, how the decision-making process works, and what exactly your day-to-day responsibilities would be versus just being in your finance element. Number 4, working until midnight or AMs in investment banking made me feel like if I was to work in a 9-to-5, I was definitely gonna make that 6 to midnight very productive. I could fit all of the things that I never had time to do and always wanted to. Coming out of investment banking, I think first 3 months, I was really trying to be that productive person who was filling up every hour after my day job to try and do those things, whether it was gonna be a side hustle, meeting friends, going out for dinner, watching something, reading books. And I was really trying to maximize the amount of time that I am being productive for. After a bit, I feel like your priorities shift too. After you had those initial months where you do everything and maximize all of your waking hours, you kind of tend to slow down and take your time with doing things and enjoy that kind of spare 15-20 minutes for doing nothing or just doing something in a slower way, or just taking your time to process things and kind of think about things and reflect on them a bit better. I feel like it made my decision making a lot clearer and a lot more streamlined. It also allowed me to think about what I want to focus on in my life in general better. And it always made me like a less anxious person in general. And right now, I feel like I know that I'm not gonna be productive every hour after work or at work, and I feel okay about it. I feel a lot more okay with not being at 100% of the time, and that feels very freeing. Last but not least, number 5. For me, leaving investment banking for a scale up really made me feel like I could really do anything and try anything out. It put me from that predefined path of I would know how my career looks like in 10 years to anything is possible type of mode. I feel like I started exploring a lot more, probably as a function of more free time as well, but I started exploring a lot more in terms of what interests me, what types of things I want to be doing, either professional field, my career, or my personal life, how I want it to look like, and what is truly driving me versus what is a picture perfect type of career and life that I think people would want to have. Those were the top 5 things that I learned from leaving investment banking for a startup or a scale up. If you are on your decision journey, good luck with that. I hope that clarified some of the aspects in your life. Otherwise, feel free to ask any questions. I'm happy to help. Thanks for watching. I hope you liked the video, and I hope you make the right choice of either staying in investment banking or going on to startup and scale up world.